There's a real estate strategy that lets you buy a property, renovate it, rent it out, pull all your money back out, and then do it again, over and over, with the same capital. It's called the BRRRR method. And it's how a lot of investors build portfolios of 10, 20, even 50 properties without being rich. Today, I'm breaking down exactly how it works, what can go wrong, and whether it's actually realistic for a beginner. BRRRR stands for 5 steps. Buy, rehab, rent, refinance, repeat. You start by buying a distressed property below market value. You fix it up. You rent it out to tenants. Then you go to the bank and refinance, meaning you get a new loan based on the property's now higher value. That new loan pays off your original loan and returns your initial investment. Now you own a cash flowing rental property with none of your own money left in the deal. So you take that same money and find the next one. The most important step is the first one. If you mess up the buy, nothing else matters. You need to find a distressed property, something that needs work, and buy it at a significant discount. The golden rule is the 70% rule. You should never pay more than 70% of the after repair value, minus your repair costs. So if a house will be worth $300,000 after renovation and it needs $50,000 in repairs, 70% of $300,000 is $210,000. Minus $50,000 for repairs, your max purchase price is $160,000. That's your number. Do not get emotionally attached and overpay. Next is rehab. Renovate the property to bring it up to market standard. Here's where most beginners get wrecked. They underestimate costs by 30 to 50%. You need to walk through with a contractor before you buy, not after. Get real quotes. The goal isn't a luxury home, it's a clean, safe, attractive rental. Kitchens and bathrooms sell homes and attract quality tenants. Paint, flooring, fixtures, those are your highest return improvements. Skip the swimming pool and the imported tiles. Once the rehab is done, you place a tenant. This is where your cash flow starts. The rent needs to cover your mortgage, property taxes, insurance, and still leave you a profit every month. If it doesn't cash flow after all expenses, it's not a deal. It's a liability. Screen your tenants carefully. A bad tenant can cost you 6 months of rent and thousands in damages. The fastest way to lose money in real estate isn't a bad purchase. It's a bad tenant. Now the magic step, refinancing. You go to a bank and get a new loan based on the property's new, higher value after renovation. Most banks will lend up to 75% of the appraised value. So if you bought that $300,000 house for $160,000, put in $50,000 in repairs, your total investment was $210,000, but now it's worth $300,000. The bank lends you $225,000, which pays off your original loan and returns most of your investment. You now own a property worth $300,000 with only a small amount of your own cash still in it, and a tenant paying down the loan. Now, the honest truth, BRRRR is not easy. It requires finding deals other investors miss, managing contractors who don't show up on time, dealing with banks that move slow, and tenants who don't always pay. The refinance takes 6 to 12 months after purchase. You do need money or a partner up front. But if you can handle the complexity, it's one of the most powerful wealth-building strategies that exists. You recycle the same capital over and over. That's how portfolios are built. If you want more breakdowns like this, subscribe. Next time I'm covering the 5 mistakes that cost beginners thousands.